Okay. So I think what you're really seeing is just a market that, when you look at the price action has been very ugly for about 2 weeks. And even before the rally came. And I think that it's in a bear market. It wouldn't surprise me to see 1,600 or less.
Like I said, right after Powell's speech, it seems to me like the gold market did not anticipate or properly price in such hawkishness from today's speech. Is that fair to say?
Probably, but I mean, gold didn't look good before this. I mean, gold peaked on August 12th again, along with silver, and basically hasn't had, I think it's had one update since. Okay. So I think what you're really seeing is just a market that, when you look at the price action has been very ugly for about 2 weeks. And even before the rally came. And I think that it's in a bear market. It wouldn't surprise me to see 1,600 or less. Okay. Again, I think you have to establish in your mind whether you're investing or you're trying to trade it. If you're investing, don't over leverage it. Just buy what you can afford and just put it away. Because I assure you, 5 years from now or 10 years from now, gold's going to be double what it is now. But it's going to take a lot of guts and glory to get through this, right, as we see in all markets. It doesn't really matter. We want to convince ourselves that gold is the savior of the safe asset play. The truth of the matter is the number one place where money goes when it's scared is into the U.S. dollar, because that's where countries put their money when they're concerned.
So gold's going to do well 5 to 10 years from now. Well, what about in the intermediate or interim? In the medium term?
I'm short gold, and I don't see it turning around anytime soon. Could it? Sure. We could rally next week and get long. Okay. But based on the long-term algorithm that I use, we're short, and I don't see any signs of it turning around anytime soon. I think that we'd have to probably go.
You're bearish on gold, you're bearish on the stock markets. Where should people go then?
Well, I think the stock market, now this again, you have to define what your objectives are. Okay. If you're just trying to trade the market, I'd be buying soft commodities if I was just trading. Okay. Mm-hmm. If I was investing, I have no problem that the equities are soft. I'd be looking for some value plays there that I know I could hold on to. Same thing with gold. I'd be a buyer of gold, silver, and platinum if I could afford to hold them and was not leveraging. And I'm not talking about buying mining stocks or buying stocks. I'm talking about buying the hard assets that you can either store at Kitco or put in your safe at home, whatever you want to do with it. I'm talking about the real hard asset, but you got to have, first of all, a cast iron constitution to do that. And you got to be willing to hold it and not worry about panicking out if it goes lower, because it's probably going lower, but it's really just a buying opportunity, in my opinion.
Buying opportunity. Mention, it usually doesn't happen that a major central bank, especially as one as big as the Federal Reserve, is raising interest rates into a recession. I mean, maybe right before, maybe right after, but when we're in a recession, I mean, if the White House wants to define it as not being a recession, that's fine. But let's be technical here. They're raising into 2 consecutive quarters of negative GDP growth. That doesn't happen all the time. In fact, I don't think it's ever happened before. What's going to happen to the economy, Ted? What's going to happen? What?
We've got a third quarter coming of negative GDP, and it's never happened before. Okay. So
what is this going to do to the economy?
Well, listen, we're already in trouble. Listen, I've said this before. I'm going to say it again. The markets have been slightly in an uptrend, but overall, I expect to see a 50 to 60% haircut to these markets. I think that we're going to get creamed at some point. You can only hold up a helium balloon so long. Eventually, the helium comes out, and it's starting to come out now. Now, again, today's sell-off, I don't put much into it. It's a sell-off, okay? But overall, we'll see if the trends change and the markets start to go down. But I'm certainly pretty certainly well convinced that we're going to go 50 to 60% lower before this whole thing is all done. They have totally trashed the economy and done everything as badly as you can handle. Something has been done by not only the Fed, but the administration in power.
So what's going to go 50 to 60% lower?
The equity markets are going
the
down
equity
50
markets. Yeah, I was going to ask you about that. There's some analysts that are saying that these bounces that we've seen, they're normal for a bear market. For example, like you recall that throughout the last month and a half, since the end of June, the S&P 500 has been rising along with other equity indices. So, this trend started to reverse 2 weeks ago. Was this sort of a dead cat bounce in the sense that it was just a 1 month thing, or do you think that was,
It's hard to say. It's really hard to say what it was. The volume has been very, very light. So it's been really hard to grab. In the summertime, it's hard to really grasp. Is it truly a bear market, or a bear market rally, or was it just a natural rally? You know, when you have very light, I mean, our volumes were down about 50% for about 6 or 7 weeks. So it's hard to grasp why normally bear market rallies are the most vicious and the fastest and look the best. So I can't say that this was directly a bear market rally. However, if anybody looks in their own finances, they can certainly see that it's recessionary times and they're watching their spending, because again, the price you're paying at the pump is a big dictator to how we live the rest of our life.
Okay, let's touch on that. So energy prices, we're not yet at $100 a barrel. What's the next leg move? You think it's going to be up or down?
All-time new highs, I think, are coming. Again, this is far from over. They've drained the Strategic Petroleum Reserve, which has never worked ever in the history. It's been tried 5 or 6 times. It has never worked. That oil is supposed to be in place for wartime. Okay. And now that they've sold a bunch of it to China. Okay. Now, if the only way they're going to solve this problem, okay, today is to go back to fracking and becoming a net exporter of natural gas and crude oil once again, which would be a tremendous help to the UK and to Germany, as well as finally making the sanctions that they tell us are working on Russia work, because Russia is celebrating. Every time President Biden opens his mouth, Russia celebrates. They're making a fortune right now because they control the entire natural gas and a lot of the oil market in Europe.
Okay. So let's sum up then. You think energy prices are going to go up. You think the equity markets are going to go down another 50, 60% before this is all over. And the Feds, in your word, they're being an idiot.
Yeah.
Any good news for us, Todd?
Well, good news. I mean, listen, good news is markets, do this on occasion anyways. It's not like we haven't seen it before. We saw it in 2008. We saw it in 2001, and we saw it in 1987. So it's actually healthy overall, because the one thing about the United States of America is that every 2 years you get a new shot to change the voting block. Okay. But they're going to have to do something with the fiat currency system there. Again, it's a fraudulent system. It's put a lot of pressure on gold. Now, again, I'm a big fan of gold long term, but I am short gold now on paper. Right. I'm always long in physical and storage. But I think that gold's going to be under a lot of pressure as well. I think what you're really going to see is the soft commodities are going to benefit first. And we're already starting to see that turnaround in the grain markets. Gold, let's talk about gold. So gold fell 1.2%.